How do you do, ladies and gentlemen? I'm your host, Seth Julian, welcoming you to today's session where we are going to be talking about next week, the week ahead. And the first thing, of course, on next week's agenda is what's happening in the UK. Amateur hour is actually over. Well, not really over, but it's on its way out, as Mrs. Truss is no longer she's the prime minister. She's going to shortly be the erstwhile prime minister. We're going to start a search for her replacement, likely to be her erstwhile contender for the job, Rishi Sunak, the erstwhile exchequer under the erstwhile Boris Johnson. A lot of erstwhiles in London. That's why this is falling. They're starting to look like a banana republic. So this is the UK this is the FTSE 100. And it's falling precipitously. We have a short position in this, and it's coming along nicely. So shorting the FTSE, at least for the time being, is a profitable undertaking. And were that not pessimistic enough, you won't be surprised to see that the sterling rate, the cable rate, pound dollar, is also and we're short cable as well. And you can see, if I could focus it in, you can see that it's continuing to fall as well on not exactly powerful volume, but we think cable is going to continue to weaken as well. So pound dollar down, FTSE 100 down on really banana republic style turmoil, excuse me, in Great Britain. And speaking of that, speaking of strong dollar, I do want to point your attention to this. This is the U.S. dollar index, a trade-weighted basket of currencies against the U.S. dollar. And again, we have a long position in this asset, and it's also in the money. You can see the entry point at the dotted line. This is proving to be a good trade and likely to continue to be a good trade. As you can see, the secular trade is up, certainly on the daily, on the 4-hourly, on the weekly, obviously quite significantly. So that trade, and that's for the simple reason that as interest rates rise in the United States, and the Federal Reserve has indicated that it is going to continue raising interest rates until inflation is under control, this is likely to continue its upward trend. The other FX positions I want to make you aware of also, excuse me, but before we go to that, I want to point out one terrific set of trades. As interest rates rise, bond prices fall. And you can see these falling here. You can see we're short the US 10-year, we're short the Euro Bund, which is the German government 10-year. These are all likely to continue to fall as interest rates rise. People sell off their bonds that were offering lower interest rate returns, and therefore these are good shorting positions as well in a rising interest rate environment. Let me go on to point out dollar yen, one of our favorite trades, really, and another perennial excellent trade, of course, is the dollar yen. Again, we're long here. It's continuing to go up. This is a trade that doesn't look. It's over the 150 handle now. We're looking at 150, 154 on the dollar yen, which hasn't been this high since, I don't know, 1990 or something. And this finally inflation starting to erupt in Japan, which they've been trying to engender for 30 years. So this trend is likely to continue for some time until the Bank of Japan reverses itself, and Mr. Kuroda has made no indication that he's about to do that anytime soon. So that is an excellent trade. And of course, we want to look at dollar yuan. The yuan continues to weaken in the face of really what are truly endless where is dollar yuan? Oh, I'm sorry, I'm in the wrong category. In the endless round of zero tolerance COVID policy on the part of the Chinese government. So we can see the yuan is also, we're long the dollar yuan here, and it's also likely to continue to rise on the 4-hour, on the daily for sure. So these are good positions as well, because these are not likely to change. So we've got a strong dollar against the yuan, a strong dollar against the pound. So pound dollar down, dollar yuan up. These are all going to be likely to be continuing good trades. I do want to point out, of course, one of my favorites lately, and really it's this beauty, the dollar Turkish Lira. Now, we are long at this point, but I want to point out we've entered and exited. We've taken profits out of this trade many times already. So this is a perennially good trade, as inflation is probably over 100%. The official rate is 90.92%. The Turkish Lira has lost, as I'll show you on this, has lost a tremendous amount of its value since the beginning of the year, and likely to do so, and for the simple reason that the Turkish Sultan Erdogan believes that high interest rates bring inflation. This is not generally considered to be certainly not the orthodox view. It's not even considered to be the intelligent view, and therefore it's a great opportunity for us. Let's take a quick look at the economic calendar. We've got next week on Tuesday, I believe. We've got Monday. I'm sorry, my mistake. We've got a lot of important data coming out of China. I want to point out that it's generally very low. GDP year on year in China for the last 15 years anyway has been over 10%. So, or 6%, my mistake. It's half of what it has been for the last 15 years. So they're in a significant economic slowdown. That's not likely to change anytime soon. And we've got an important sentiment, U.S. sentiment coming out. Here, U.S. PMI, over 50% positive. That's likely to stay positive. That would be a big surprise if it fell. Let's take a look. Yes, the housing price index. This is on Wednesday, I believe. No, still on Tuesday. This is on Tuesday. House prices in the United States, they're continuing to fall as interest rates rise. That's no surprise there, really. That's really about it. There's new home sales. That's not really expected to take off too much. No surprises there. And that's really it. There's nothing really too critical on the economic calendar next week. So what we may see, and this is speculative, as is everything we're talking about here, ladies and gentlemen. Leave us not make any mistakes. We are trading in the capital markets, and therefore there's a risk of being wrong. The probability of the unexpected occurring is the very definition of risk, and that happens in the capital markets, and I'm wrong, and everybody else who trades is wrong. Now and then, we're not always right. So you should only be trading with money you can afford to lose. Having said that, the trades we've looked at so far look like they're in trade and likely to continue for the near term. And the only thing that possibly may result as a result, following last week's coronation of President Xi, which was probably for a lifetime term, is a crackdown on COVID, a crackdown on techno stocks, and an attempt to tighten his grasp on the Chinese economy and suppress dissent against the very, very strong-fisted, iron-fisted zero-tolerance policy. So we may expect further weakening in China as Xi increases his grip. So, ladies and gentlemen, that's our outlook for next week. I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now.